what's up, all of you beautiful subscribers? Welcome back to the Jack Chapple Show. So what's on the docket today? We're going to be talking about some Target and Amazon news. That's actually kind of big news on a macro scale. We're also going to be talking about Alibaba, Tim Cook, the CEO of Apple, some Russian bank news. There's some banks over there that are having a lot of trouble, and you know, some real estate news and a bunch of other stuff. But anyways, let's just jump right into this. Actually, before, I would just like to mention there's going to be no stock market winners and losers today because I'm recording this earlier at about 9:15 a.m. right now, and so there's going to be no stock market winners and losers today because, you know, the market, by the time I finish this, the market's not going to be open for that long. Anyways, Target is plotting a big move away from AWS as Amazon takes over retail. So what is AWS? A lot of you have probably heard AWS, just heard the acronym. And actually, I was watching an episode of Silicon Valley, and they actually just squeezed in an AWS reference, and it stands for Amazon Web Services. Okay, so Amazon Web Services, this is something that's been around for, I think since 2006, 2007, but it got really popular about 5 or 6 years ago. It started getting used by a lot more people. So what is Amazon Web Services? It's pretty much a place where if you want to start an internet company or an app company, and you need, a server, and you need, a place to store your data and so on, you can go to Amazon and they will actually do that for you. They will host everything that you do. And so normally, I mean, the big giant player in this industry is actually Oracle, and Oracle's been the biggest player in this since 1977. I mean, people don't really realize this, but if Oracle wasn't a company, then pretty much every single internet company out there right now would cease to exist. I mean, that's how influential Oracle is. I mean, they're a $200 billion market cap company. Anyways, so back to Amazon Web Services here. So people don't really realize that how much this actually has grown for Amazon. And so the vast majority of Amazon's revenue comes from their marketplace, right? Now, a lot of their earnings don't come from the marketplace, though. So keep some perspective for you guys here is, after every Amazon transaction, they get whatever 1% to 13%, but they net like almost less than 1%. After everything, they have very small margins on that e-commerce marketplace. However, where they make a lot of their profits is actually from Amazon Web Services. That's a much more profitable branch of Amazon. And so it's actually been increasing its share in revenue and earnings for the company as a whole over the past decade or so since this has started here. So it's becoming a more important business avenue for Amazon. And actually, I had to decide when I started my, the startup e-commerce marketplace I got going on here, I had to decide what I should use to kind of host everything that I'm doing. And the number one thing I didn't want to do is to have Amazon hosted, because if there's a chance that my company grows and it all does very well, I wouldn't want my competitor to host all of my data and servers, and I'd be paying them essentially to, I'd be paying them to just, host my site. I'd be benefiting them, even though I could go with a different company here. Now, Target made this mistake. Apparently, Target has been using Amazon Web Services for about a decade here, and I understand why. They were, keep in mind that 10 years ago, Amazon was not the Amazon that we know today. Amazon was essentially just selling still DVDs and CDs and stuff at that point. They weren't the giant e-commerce marketplace like they are today. And so Target has just kind of announced, that's probably a bad idea to pay Amazon, tens of millions of dollars to host our website every year. So we're just going to kind of make our own or go with someone else here. And so that's what they've decided to do. So Target's been competing with, obviously they're competing online with Amazon, they're competing with Walmart, they're competing with eBay, they're competing with, every other giant e-commerce marketplace out there, right? And so, Target's officially decided it's probably a good idea to hire a web development team and move away from the Amazon Web Services, stop giving them profits and revenue that I could be giving to a company that isn't a competitor like Oracle, or we could start our own here. And so this is something that we've seen from a lot of companies recently, actually. So I've seen it, like, I didn't even realize this until I started my own stuff recently, that, Microsoft has their own, essentially web services. Microsoft has Azure, Google has some databases like Google Bigtable, which is open source. Oracle's obviously the big player in this industry here, but we're seeing a lot of big tech companies try to create their own data centers. I mean, Facebook's been doing that too. Facebook's been creating Facebook's created their own stuff. They're hosting all their own data and all that. And anyways, this is something that we're kind of seeing this trend here. A lot of these giant tech companies are moving away from hosting on Oracle, from hosting on Amazon, and they're just kind of creating their own infrastructure. And I think that that's a good way to go long term here. Actually, funny enough is that I did see that when I did look at Amazon Web Services when I was starting my own stuff, and I did see that Netflix actually uses Amazon Web Services here, which is kind of funny because, I mean, Amazon Video is a direct competitor against Netflix. People don't realize this. When you get your Prime membership, you have access to Amazon Video, has a bunch of movies on there that you can all watch, and TV shows, I mean, thousands of new movies too, and Netflix hosts their stuff on Amazon, which is, it's kind of funny how that works out here. So that's the first thing I wanted to talk about today. Let's move on to Alibaba. Alibaba. So why is this important? It's kind of funny because Alibaba is something that I've been tracking as a stock, but I've never really talked about it in a video. I've kind of realized that Alibaba is a big tech player worldwide, but I just never really talk about it. And so let's talk about it today. Alibaba, and let's compare them actually to Amazon. Let's compare the stocks and let's compare them as a company, okay? So I think that we just have a few good metrics here. Let's look at this. All right, so Alibaba, again, if you don't know, Alibaba is just another giant e-commerce marketplace. However, they do a lot of connecting manufacturers to business people. All right, so they can connect manufacturers to business people. They connect business people to consumers and consumers to consumers. And I feel like a lot of their infrastructure is slightly different, I should say, than Amazon. So Amazon's largely, business to consumer, or, also in some cases, like just a random seller to consumer. All right, so consumer to consumer, right? I think Alibaba is a lot better at connecting, manufacturers to businesses. And I think that's one of the reasons why they are growing so fast. And let's take a look at this here, actually. So Alibaba, since we've been seeing how much on a roll that Amazon's been since December as a stock, right? So from December 23rd, 2016 to today, Alibaba's stock has increased 92%, making them a nearly $400 billion market cap company. Amazon stock since December 23rd has gone up 25%. All right, making them a $474 billion company. I mean, think about that for a second here. Alibaba has gained significant ground in the e-commerce marketplace world in terms of the market share of the stock market, I guess. And so what I wanted to kind of mention today was why this is happening here. So let's go to Alibaba here. And so if you were to look at these companies, though, from a revenue perspective, it's not even close. I mean, Amazon's $150 billion in revenue, and Alibaba has $26 billion in revenue for the trailing 12 months here. Revenue per share, that's variable. However, here's why Alibaba is more valuable as a stock. All right, and there's one simple number here. The operating margin of the company, 32% for Alibaba, 2.31% for Amazon. I was just mentioning earlier about how Amazon's e-commerce marketplace, their margins are very thin on that, and so they have to kind of make up for it with a lot of their web services. I mean, their margins on their e-commerce marketplace, they're less than 1%. All right, they can even be negative if you account for shipping. Their web services is where a lot of their profits come in, actually. And so that's what's now Alibaba has a much better operating margin. I haven't looked into their company as a whole here, but their margins are much better, which is the reason why, they have really good earnings. Okay, so Alibaba has really good earnings. They have really good profit margins. They just don't have anywhere near the amount of revenue, and they aren't as big of a company as Amazon. They just have better earnings. And here's the deal, is that there's kind of two ways that you can approach a business. There's two ways. One of which is, you take out a bunch of debt, you lose a bunch of money. However, your top line, your revenue grows for years and years and years. And then hopefully after your revenue grows enough, then maybe you can start to turn profits and then, shrink your debt down, pay pay your debt down, that maybe after 10 years or so, you're a very extremely profitable company. So that's one route. The other route is, so that's the Amazon route, by the way, which is kind of funny. And so the other route is, you grow the business like you probably should for most people, which is, from the get-go, you try, maybe you get a few investors, but you try to make the company as profitable as quickly as possible so that if there's a downturn in the long run, you can pay back all of your debts and, you have a large portion of money in the bank, and so on. So we see this dichotomy here. We got the Amazon taking one growth route where you're taking out a bunch of debt, just trying to grow as fast as possible, take over the entire market, worry about profits later. Then you got Alibaba, which is more of a cash flowing. They're still growing fairly fast. I mean, look at this quarterly earnings growth here is 94% here, which is substantial. But what I'm trying to say here is that they're kind of going about this in two different ways here. Amazon's still the big giant here in terms of revenue, but it's just interesting to see that they're going through different strategies. Just looking at this number, 32% versus 2.31%, you can kind of tell what they're doing here. So look at this. Let's look at this operating margin here. I mean, this isn't something that's new, right? They've been doing this as a company for years, and so looking back at the 2015 report here, I mean, revenue for Alibaba was 10 billion and revenue for Amazon was 85 billion. And Amazon's operating margin was 0.12% and Alibaba's was 42%. All right, so this is just how they are as companies. This is their two different strategies here. Which one is better? I guess we're going to see what happens. I'm more of I like the cash flow, but I understand. I mean, Amazon is so much bigger than Alibaba. And actually, let's do some math here. Let's see how much Alibaba's caught up in the past 2 years. So Alibaba's revenue went from 10 billion to 26 billion over 2 years. So an increase of 2 times 2.6 in English. Thanks, Jack. And Amazon's revenue has increased by less than 2. So I guess Alibaba's catching up here. And what do you guys think of both of these companies here? Leave a comment down below. What would you bet on? Obviously, Amazon's still the big dog here, but do you think that Alibaba can catch up? I mean, if you look at this operating margin here, if you look at the revenue, if you look at the stock, Alibaba seems to be catching up here. And obviously, they have a more of an advantage over in Asia, because I believe that's where the company started, right? They're an Asian company here, founded in Hangzhou, China. And so China's obviously a growing economy. They're becoming more capitalistic. And so that's probably another reason too. Jack Ma owns 7.8% of it, eh? He was able to hang on to that much. Good for him. All right, so we're going to move on to the next thing I want to talk about. Let's talk about Tim Cook. Tim Cook, the CEO of Apple, just took home, measly $89.6 million this year. Why is this? So why am I talking about this? Normally when there's a report that comes out like this, I don't talk about it because I don't really care too much. But I wanted to mention it because what do you guys think of CEO compensation? So the reason why Tim Cook got this $89.6 million recently was because part of his contract was that if the Apple was in the top third, I don't know where this is, if Apple was in the top third of earnings, I believe. Oh yeah, here it is. So Cook received half the award because Apple stock delivered shareholder returns in the top third of the S&P 500 during the past 3 years. So here's my opinion, or here's what I want to ask you guys. What do you guys think of CEO compensation like this? Of, because a stock does really well, or because, profits are really good for a giant company, do you think that it's fair that Tim Cook gets paid almost $90 million because of some compensation? Because he hit some targets as a company. Do you think it's fair? And I kind of have two ways of looking at this because, there are certain companies out there where, regardless of who you put into the CEO chair, the company's still going to do well. A lot of those companies, I can't name any offhand here, but a lot of companies out there, if you were to replace Tim Cook with some other random CEO, do you think that Apple would have still done as well? And this also, my point being is, do you think that Tim Cook deserves $90 million because the company did well? Or do you think that CEO should get compensated that much in general? Even if they do run the most valuable company in the world. Do you think that CEO should get compensated that much in general? Or do you think that CEO should get compensated that much in general? Even if they do run the most valuable company in the world. Do you think that CEO should get compensated that much in general? Even if they do run the most valuable company in the world. And so that's my question to you guys. I think that, yeah, I mean, when you look at Apple, when you look at their revenues here, let's look at Apple revenues here. Apple revenue. What's the revenue? Hundreds of billions of dollars a year. Let's take a look. $215 billion a year. And so they're paying their top dog 90 million of that. I mean, I would think that that's okay. But what do you guys think of this? Let me know in the comments down below. I think that my opinion is that, you know, a lot of people in the financial world that get compensated, you know, a lot of those big bankers out there, hedge fund managers, some of them are really good and earn their money, but a lot of them aren't. A lot of them get compensated hundreds of millions of dollars, literally hedge fund managers, hundreds of millions of dollars. And the reason why they're getting compensated that much is simply because they were able to raise money from other rich people and are essentially just money managers. And you know, that's kind of a gray area for me. I don't really like, you know, I don't like other people managing my money in the first place here. But see, they aren't really innovating, right? They're just seriously handling money and trying to invest properly. Meanwhile, Tim Cook, you know, he might be making a lot of big decisions. He might have, you know, transitioned. He might have started Apple Music, trying to branch out and innovate in the tech world. So, I mean, I do give a lot of leeway to these types of CEOs. I mean, the CEOs in, you know, tech world, Silicon Valley, and, you know, just, you know, people trying to innovate, I don't really have much of a problem with them getting $90 million. In the financial world, I kind of do. In the financial industry, I do. So what do you guys think of that? Let me know in the comments down below. Let's talk about the next thing here. Just quickly, there's a few just quick stories I want to mention here. This is one of them. I didn't really realize that Russia was having a speculative bubble bursting here. So what pretty much happened here was that one of Russia's big banks, I believe that they are bailing out, let's see, Russia in one of the biggest bailouts in history, rescues. All right, so one of their banks was lending out a lot of money, and pretty much what happened was a lot of people were pulling out their deposits, and all of a sudden that bank is, you know, losing money, and they've been going through their reserves. And people have been pulling out all of their money from the bank because they don't know what's going to happen, and they think that they were giving up bad loans. They think that it's going to be something similar to what happened in 2008 with all the banks here, with all the banks in the United States. And so that's pretty much what's happening here. And then there was a bailout for this bank. What is this? How do you pronounce this? Otkriti Bank. Is the country's largest private lender by assets according to second quarter data from Interfax, and some of its shareholders are connected to major state entities, a fact that prompted some analysts to believe it was too big and influential to be allowed to fail. Doesn't that sound familiar? Too big to fail, eh? So anyways, that bank got bailed out here, and we're going to see what happens. I'll keep you guys updated on the Russia situation here. And it's a Russia situation that doesn't involve Trump or politics, which is, you know, finally a nice thing to hear about. Even though it's bad, obviously I don't like when people lose lots of money. I don't like when when big companies go bankrupt or anything. But it's nice to hear the word Russia and not hear Trump after it. So anyways, let's just take a look at this here, actually. In June and July, Otkriti's customer deposits contracted by 435 billion rubles, which is 7.4 billion. Oh my God. Equivalent to 18% of the bank's total liabilities. Oh my goodness. Oh my god. You know, let's talk about the system as a whole, the banking system as a whole here. When you deposit your money in the bank, they lend that out to other people. And it's the system where if they can't keep getting deposits and growing their deposits, they aren't able to lend out their money, and they're going to go bankrupt as a company. They have a bunch of expenses too. They have payroll too, right? And it's kind of stupid how the system works. I mean, should banks be able to lend out your money? I mean, that's a whole different story here. And how did the system get set up like that? Man, that's weird how that works. Anyways, so that's a story that's going on in Russia right now. Another one going on in Russia, actually, is so Burger King, this is not a joke, Burger King has launched its own version of Bitcoin in Russia. It's called the Whopper coin. Yep. Apparently, this article's from the Miami Herald. Apparently, they say it's true here. I didn't look into this much further here. But man, Burger King is getting into the cryptocurrency world. They're not really getting into the cryptocurrency world. They're essentially having their own wallet, their own point system. I mean, a lot of other big companies have it out there. But it's just funny because they call it coin. It's like people are connecting with Bitcoin. But, think about it. There's Amazon Wallet, right? There's all those, there's, point systems when you have Visa and all of that stuff. And it's kind of like their own point system here, which is interesting to hear about. Anyways, yeah, Burger King cryptocurrency. Fascinating how that works here. I'll keep you guys updated. I don't think that this is going to last here. We're going to move on to the next thing. Let's talk about student loans here. So student loan balances jumped nearly 150% in the past decade. It's at 1.4 trillion is the amount of balances that are out for student loans right now. And let's take a look at this here. So Generation Z, which is the, I guess that what's the teenagers right now and people that are 20 years old, they have an average student loan balance of $11,800. Generation Y, which I think I'm a part of, is $33,000. Generation X, $39,000. Jesus. Boomers, $36,000. Silent. What's the silent generation? Silent. I have no idea what that means. Anyways, what I'm trying to say here is that the average person has an outstanding student loan balance of $34,000, which is up 62%. And man, this is like bubble-ish territory here, guys. I just wanted to mention this. I talk about it a lot, but I mean, it's like an actual crisis here. It's a crisis if you take out this loan and then you go and take a gender studies course or history of Play-Doh or something, right? Like one of those stupid courses which you're not going to get a job for. Now, some of them are important. I rip on the arts a lot, but a lot of them are important, like arts, getting into the art industry, sometimes, graphic design industry, whatever. You're going to need a degree in something along those lines. I understand it. But, I mean, this is kind of, if you're going to school, you're taking out $40,000. I mean, think about what you could do with that $34,000 loan here. I mean, that's not even a loan. That's the outstanding balance. So imagine, I'm guessing that their loan that they took out was over $40,000 on average. And this is just kind of a crisis we got going over here. Anyways, what do you guys think of the student loans? Do you guys have student loans? And how do you fix this? I mean, a lot of people think that the government should stop backing guaranteeing the student loans, which I think is a good start here. How do you change that? How do you change that as a system? I don't really know. And it's all these universities are charging so much in tuition. But you know what? Here's one of the things is that, when you went to university 20, 30, 40 years ago, you didn't have any of the perks. I mean, you essentially had your dorm room. And that was it. And if you wanted a mini fridge, you could have that. And there wasn't a lot of amenities that were on campus in many of these places. And I was watching this documentary recently about how all these universities, they're upping all the tuition, and they're using all of that tuition to essentially give all of these fancy amenities that no one really needs so that they can kind of compete to get more students to come to their university. So people are having like these giant, parks and these super high-tech gyms, right? And adding on different high-tech whatever branches that people don't necessarily need. And that's one of the reasons why that's where your tuition money's going. It's not going into the professors. It's not going to whatever you're learning at your school. It's going towards, those additional amenities like a pool. There's a lot of universities now where the residencies where you stay on the university campus, they have like pools, and they have different giant amenities that people didn't have 20 years ago. And so that's where a lot of the tuition money is going. It's not going towards the professors. That's where it's going. So what do you guys think of that? Let me know in the comments down below here. And we're going to move on here to, I guess we're not going to talk about pizza delivery. Let's close out on this one. Let's close out on Carl Icahn. Did I make a video on him? I don't think so yet. I should. Carl Icahn. He unloads unfinished Las Vegas casino for $600 million, more than 4 times what he paid for it. And so, it's unfinished. It mentions that in the title here. So what Carl Icahn did was pretty much what happened here was some company was building a giant Vegas resort or hotel, whatever this is here. Is it a hotel? casino. Okay, so casino hotel. They were building a giant casino hotel, and the project was it was estimated to cost $2.9 billion. Now, while they were building it, oh, here we go. Icahn bought the site that was to be Fontainebleau, Las Vegas in February 2010. He bought it for $148 million because the company that was building it went bankrupt. And so they were having this $2.9 billion construction, and they went bankrupt, so they had to liquidize all their assets. Carl Icahn swooped it up for $148 million, and it was very unfinished at the time. It's still unfinished. But yeah, so whoever buys this still has a lot of work to do. I mean, I think if the company's buying it for $600 million, and it was estimated that it would cost about $3 billion, right? So anyways, that was a nice return. I mean, think about when he bought this. When Carl Icahn bought this, it was 2010. This was when Vegas got hit the hardest during the financial crisis. Vegas, there was all those houses. I mean, you could buy houses for literally $40,000, giant, beautiful 3,000 square foot houses for $30,000. That was something that was happening. Vegas took a big hit. It's a luxury market for the most part. Touristy market, people couldn't travel anymore, so they got hit really hard. He came in here, he swooped up the deal for $148 million, probably a giant discount. Obviously, 2 to 3 times less than what it was worth at the time. And yeah, he sold it. And this is something which, it separates, really big investors from really smart investors from people who aren't smart. I mean, Warren Buffett talks about this, and Mark Cuban too, about how, in 2008, 2009, 2010, anytime that there's any sort of recession or crash, it's called like the World Series of investing. That's what Mark Cuban calls it, where, for example, from 2011 or from 2012 to today, Mark Cuban won't do a lot of investing, just period, in real estate or stocks or anything. However, he will do a ton of investing. He'll do 90% of his investing when the market crashes. And so that's what Carl Icahn does. That's what Warren Buffett does. That's what Mark Cuban does. That's what a lot of billionaires do. They just hold on to their money for years and years and years, for about 10 years. And then once everything craps down, once the market crashes, you invest all of your money, you get everything at a discount. The market rebounds very quickly. And all of a sudden, over the course of the next 5 years, you made 80% on your money. And that's just what happens. And this is a good example of that here. So anyways, I think that's going to wrap this video up here. I'd like to thank you very much for watching. Make sure to check out my stock market program in the link down below if you're interested in that, or the Wealth Accelerator that teaches you how to run a business and so on here. Was I going to give you guys an update on the... I thought I was going to give you guys an update on... I'll just do it right now. Update on the e-commerce marketplace that I'm building. And so I'm hoping that I can have my first test product up by this weekend. Or no, I was probably next Tuesday. So we're going to give myself about 6.5 days here to get it done. I have my first product up, and I'll sell it just to myself, just to test if it works. I'll ship it to, if someone I know, I'll ship it to my girlfriend or something, see if it goes. And also, I think I've mentioned I'm going to be doing like one-day shipping too. But everything's coming along very well. Oh yeah, that's what I wanted to mention here. I wanted to mention a problem. Maybe I'll do the whole separate video on this tomorrow. But what happened was I was having... There's two types of databases when you're building an e-commerce marketplace. There's two types. There's NoSQL and then there's SQL. And NoSQL is what a lot of big high information companies are using. Google, Facebook, Amazon transitioned into that last year. I'm sure eBay's jumped into that too. A lot of the big giant companies, or big giant tech companies, are using NoSQL because it's a lot easier to store large amounts of data. It's really scalable. And then there's SQL, which has been used for 30 years by every other company out there, by a lot of smaller companies too. It's not as scalable, but it's a lot easier to learn. And so I've been trying to learn NoSQL for the past week and a half, and I just can't do it. I can. It's just going to take me a lot of time, and I realized recently that it's not worth the time putting in. I can always transition and pay a web developer to do that in the future if everything goes well. And so I decided to use an SQL database for my e-commerce marketplace, and I decided to go with Oracle. I decided to go with Oracle after a lot of discussion, mildly considering Amazon, considering, Mongo, a lot of other databases. I decided to go with Oracle here because they are the best at what they do. And yeah, it's just this is all coming for, I mean, think about this. I was making a video 35 days ago, right? About 35 days ago, where I was talking about how I was so excited to learn how to code and talking about this marketplace that I was building. And I mean, we're in the final stretches here. I can code in 4 languages now, and the site should be up fairly soon. It'll be in I'll do a soft launch, like a beta launch, where you guys can just test it out, but don't buy anything. Well, I mean, you can, but I won't be promoting anything. I'll do a soft launch, and then I know once everything's all up to date, within maybe a month or 2 after I do a soft launch, we'll go to hard launch, and I'll start promoting it, and then everyone can buy stuff, and I'll be completely comfortable with that. And then maybe a month or 2 after that, I'll open it up to everyone so everyone can sell on the site. I think that's the step that I'm going here. So I just thought I'd update you guys on that. I'll probably make a whole different video on that tomorrow. I'm very tired right now. I've been essentially coding for the past 7 hours, and yeah, I'm tired. So anyways, that's why this video is at 9 a.m. because I've been working since like 2 a.m. Okay, so I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.